Then most people buy their own house or apartment and they get to know what property ownership is all about. After that, people start learning about property as an investment. Now here, I think it's a good thing to talk about the different types of property that one finds and that one can invest in. Most people start their property journey by buying themselves an apartment or a house, or even before that, they are tenants somewhere, because that's a basic human need, right? You need a roof over your head. So either you become a tenant. Jan and I were tenants for probably 2 years before we ventured into acquiring our own property. So then most people buy their own house or apartment and they get to know what property ownership is all about. After that, people start learning about property as an investment. Now here, you have residential property. Residential property is where it's property that is for residential purposes. You get single family homes, you get townhouses, apartments, and these properties are typically zoned for residential use and are occupied by individuals or families for the purpose of living. That is residential property. Then you get commercial real estate. So most people first cut their teeth on residential property. And then they might think of getting involved in commercial real estate. Now, commercial real estate is a bit more sophisticated and often requires fairly large amounts of money. There is one exception, but let us first look at what commercial property is. Commercial real estate refers to properties used for business purposes, such as offices, retail space, that would be shopping malls, etc., warehouses, storage, and in the USA, this is not relevant for South Africa, but in the USA you get multi-family apartment blocks. In South Africa you have a sectional title, right? Townhouses. And you can buy a townhouse in a complex, but you cannot do that in the United States. So in the United States, a single investor will have or own all the apartments in the multi-family apartment building. So it becomes a commercial type of investment and of course requires a lot of money to invest in. These properties are typically zoned for commercial use and are occupied by businesses for the purpose of generating income. Now, one exception here is investing in REITs. A REIT is a real estate investment trust. Now, real estate investment trusts or REITs usually invest in shopping malls, hotels, and office buildings. But investors in REITs don't need to invest large sums of money. So if you want to get involved in commercial real estate, but you don't have hundreds of thousands of rands, then you could ideally invest in a REIT. In South Africa, there are a few REITs, and most of them have shopping malls on their balance sheets. Now, when you invest in a REIT, they hopefully own shopping malls that are profitable. And the law says that 90% of the profits in a REIT need to be paid out to the investors. So you become a shareholder in a company that owns all of these buildings, and you receive dividends, not rental income. The benefit of dividends is that there is a cap on the tax that you pay on your dividends. Currently in South Africa, you pay 20% tax on the dividends that you earn because it is shares. You basically own shares. So if you are on a tax rate higher than 20%, then it's beneficial to have or invest in a REIT or in anything that gives you dividends, because you know the tax rate is only 20%. If your personal tax rate is under 20%, you need to think about it twice. Also, you need to do a proper research on the REIT that you choose to invest in. And then there is another subcategory in commercial real estate, which is medical commercial real estate. So that's another subcategory, but it's highly sophisticated, and it usually requires a fair amount of money to invest into that. So that's the type of property that you can invest in. Luckily, these days, South Africans can also invest in properties overseas for those people who want to earn returns in other currencies. If you can afford that, it's a very good idea, because diversification ought to be or is often your saving grace. If the buy-to-let property market tanks in South Africa, and you have buy-to-let properties in other countries, in other currencies where the market is flourishing, that could be to your benefit. And South Africans are invested, or we have to function in a currency which is not faring very well. So if you can diversify and earn income in other currencies, that is really a very big benefit. And of course, whatever you do needs to be tax compliant, and it needs to be done via the correct channels. But that is a possibility. But it's always best to just cut your teeth on owning a property yourself, and then maybe to get involved in the buy-to-let market by acquiring an apartment or something and just learning the ropes on what all this is about. And as you get more experience, you can expand into the other types of property, some of which are very, very lucrative. You're not always looking at something which is lucrative, though. You might want to invest in something that just gives you a steady, solid investment, which you don't need to be concerned about. Something that just runs and pays you your returns without too much input from your side. Because if you decide to invest in a buy-to-let property in South Africa specifically, you could run into serious problems with tenants that aren't paying, rentals which don't seem to be increasing because of the poor economy we are finding ourselves in. But the golden rule is still to be diversified. So you could look at owning property in the different provinces, but always you need to do a lot of homework to ensure that you are invested in something that there is always a demand for. That is why I'm very wary of owning just holiday rental type of property, because there might be long periods where you can basically get no income. You get a lot of income during high season, but the rest of the year it might be a struggle. And if you are reliant on the rental income, it's best to stay away from that type of property. So I would say, if you're looking at buy to let, always invest in a city or a town or whatever, where there are several types of industry which can give you tenants. Universities, learning institutions, hospitals, factories, industry, so that you can get tenants from various sources in the economy, not just a single source. So that is a very basic overview of the types of property that you can invest in if you want to become a property investor.